Hey everybody, Spartan here from SpartanTrading.com. Want to hit you guys with another trade review video, and in this week we're going to be talking about Edit. If you guys are unfamiliar, Edit did have a pretty decent run this week. We'll see where it's at tomorrow. Today, by the way, is Wednesday the 30th of June. So that's the day. So basically, Edit, something that I've been watching for the last couple weeks. We had this in the swings chat as well as in the live chat. We took it on the 24th. Is when we took the 50 calls. We rolled 55s yesterday, and we got lucky on Monday, sold some. We sold a whole bunch more today as well as the roll, and then we did a whole bunch of intraday trades today on it. I want to talk about the intraday trades. I'll briefly talk about the swing itself. Basically, it was coming off the lows. If you guys look at this thing on we'll flip it to a weekly. On a weekly off the lows, you can see that it came back into this range. It started to break back above this range resistance to the upside as well as cross that 50 MA on the daily and the weekly. And because of that, it had quite a bit of room to the upside. The risk reward made a lot of sense to get into the position. Also, NTLA had news the other day, I believe it was, last Thursday, whatever, or Monday, that's what it was, that caused this sympathy push as well to the upside. After they did the offering, people basically started to pile in. And I had been noticing as well, there's been some buying in the biotech side. I've been seeing some, just random kind of sweeps going through, a lot of funky price action and volume coming into the actual equity side as well. So something that I always look for, I always will keep an eye on the biotech side. Just it hasn't been hot, and biotechs haven't, the whole sector as a whole hasn't been hot. And God, I mean, 1.5 years, 2 years, it's been a while. So this could be potentially the start of those names starting to go again. We'll see. I saw quite a bit robust buying today, and sympathy plays were working all across the board, which, it's great to see. Maybe get a little bit of life back in that sector. But anyways, so risk reward made sense. Basically, Edit started to move right out the gate. I saw the NTLA moving, and my instinct was, okay, I'm going to go after Edit. I also had, two other positions on it, so it was on my screen regardless, on my P&L, so I could see it. But the two trades I want to talk about today were the 57 calls that I took and the 60 calls, which I actually took simultaneously. We only took the 57s in the room. I took the 60s by myself, and the reason for that was the liquidity was so low on them. I didn't think I was going to get filled with that many contracts, and I figured that if there's a spread on it, everyone tries to come in, and people are going to chase it, get hurt. So it just didn't make any sense. There was no liquidity. So anyways, let's talk about this though in general. So Edit, and I'm going to flip this over to the 10-minute here intraday. So Edit basically started to push right out the gate, break above last day's high, which for me is a range break of last day, looking for continuation to the upside. Right away after I saw that, I was looking at to see where it had room to, which was back towards that recent range resistance, 49.88. That level gets taken out. We got room all the way to that 58 level. And I actually tweeted this on Twitter as well. So because of that, I was looking at the, a strike that was close to that 58 level, the 57s. I figured, okay, those look good. I can get those in in the money by a point and a half, 130. And then the 60s, they're really cheap. And I figured, okay, based on the delta on these contracts, I think if we do push, premiums will start to juice these things up pretty quickly. If you guys don't trade biotechs or haven't in the past, when they do get momentum, they tend to get momentum for a significant amount of time and squeeze to the upside, especially when they're coming off the lows. Also, the premiums on these contracts before they start moving are going to be nothing. When they start moving, they're going to get juiced up very fast because there's typically so much momentum and fall through on biotech stocks. You tend to get, big squeezes on the premium side on those options. So I was just taking advantage of, knowing that. So I got into the let's talk about the 60s first, I guess. Actually, let's talk about the 57s. Might as well start lower. So the 57s, which you can see them here. So we got in basically right in the morning, basically right on the open there, and I'll actually show you the entire trade. There we go. So the entire trade, got in a bunch at 10 cents, sold some at 50 cents for 400%, sold some at 110 for 1,000%, sold some at 220 for 2,000%. So right out the gate, it was a 2,000% trade. And what I was doing was just basically, letting it push to the upside and just selling into that movement. Oh, I'm doing the wrong ones. I'm sorry. What's that, guys? Let me just pop up so that's the 60 calls. We're looking at the 60s. Oh yeah, sorry. No, yeah, my mistake. let me just pop up the actual 60 calls. There we go. I said 60s. I clicked on the 60s chart. I meant to go 57s. But anyways, started at the 10-cent level, selling into the 50-cent level, 110 for 1,000, 210 for 2,000%. It came back down. I bought a little bit more when the edit started to curl and flag intraday there. And I'm just going to actually show you guys what I'm talking about. So we have this little pullback in EMA support. Downtrend started to hold or break. EMA support was holding, so I ended up actually getting more or adding more into these 60s. So 120, 124, and I sold some at 190, 240, 170. And at the end of the day as well, we took some again at 156. Sold some at the 180 level, 175, and I'm swinging the bench, the rest of those. But overall, I traded it 3 times today. First trade, 2,000% on the highest sale, which awesome trade. And then the second times, 100% second time, and then this was whatever, like 30%, and we'll see what it can go tomorrow. Now let's take a look at the 57s. Sorry about that, guys, by the way. So 57s, similar type of deal, and I'm just going to pop up that 57 chart as well. Started to break out in the morning. I was looking for these 57s to get in the money. I bought the 57s before I bought the 60s, by the way. So grabbed a bunch at 15. I added huge at 25 cents, and then sold some at the 100% mark, letting it ride up a little bit. I actually added into the push at 95 cents, then sold some more at 180, then that 250 level, and the average was lower than 25 cents. So, but I did sell some at 250 anyways. But anyways, yeah. So another 1,000% trade. It was like 16 cent average. Same sort of deal. It did go a little bit higher. I was kind of sidetracked too because I did do one other trade, which was I did 2 other. I did 140 calls for August, and I also did the 70 calls for August, which worked nicely. But these are primarily the ones I want to show you. Just when you're looking to trade weekly options, I think one of the biggest things is look for those contracts to be able to get in the money, and you just do that by checking the risk reward on the chart. Obviously, there's a lot more to it, and we're understanding the technicals and knowing how to chart these things out and picking strikes that quickly and things like that. That's all the type of stuff I go over in my webinars, exactly what I'm doing. But I figured you guys can learn something or two from this little quick trade review. Anyways, guys, thanks for watching. If you have any questions, feel free to go to SpartanTrading.com. Otherwise, we'll talk to you guys next week. Have a good one.